What is going on, guys? Welcome back to another video. Now recently, as you guys can see, I have been uploading 2 to 3 videos minimum a week for you guys. I kept on my promise. I told you guys that I'll definitely be more consistent on my YouTube channel, and I have delivered. So that delivers a like on the video and a subscribe before we even get into the content, but you already know that's going to be good. Now really quickly, I want you guys to check out the hat, check out the t-shirt, this side, there we go. Check out this t-shirt right there. So this is the merch, guys. You get that for free when you buy the lifetime package. Now, enough of that. Let's get right into the video. What is this video going to be about? Today, I'm going to show you how to take a daily time frame entry. It doesn't specifically have to be a daily time frame entry, but today's examples, we're going to look at daily time frames and drop down to the lower time frames to enable you to take very high risk to reward setups. Okay, so I'm going to show you guys the confirmation entries, and yeah, let's get right into the video. So let me minimize this real quick. Whoa, there we go. Okay, guys, let's get into it. So I'm going to take a look today at Euro JPY, I believe, and we'll probably take a look at one more other pair. I don't know, I'll just flick through randomly, but for now, let's take a look at Euro JPY, specifically picking this because the amount of daily ICs that we had in recently, since it has been consolidating, is actually very good. Now, I appreciate, I know that a lot of you guys are telling me to slow down because some of you guys are not catching what I'm saying. Apologies, guys. It's just in our nature, you know, for being from Ireland, being Irish, we speak very fast, you know. So, but I will definitely consider for the future, and I'll definitely make sure to slow down, just like I am right now. But sometimes I will get excited and I will forget, so apologies there. Now, let's get into the video. So, Euro JPY. Now, as you can see, I've used the replay tool. I'll just get rid of that right there. And as you can see on the daily time frame, clearly we have broken out of this range. So what we had right here was a range. When you're in a range, realistically, you can trade from IC to IC. Okay, so we're taking a look at this portion in price action. We're taking a look at this institutional candle. Since price failed to make this, since price created a double bottom for us, potentially this could have been a target for us. Okay, and we also had an institutional candle right here that would have been acting as a take profit. Now, entry wise, we have this institutional candle. So there's two types of entries that you could potentially take. You can just go straight into the trade, take a risk entry. You can take a confirmation. Now with the confirmation entry, you're going down to the lower time frame, waiting for some confirmation to sort of cook up before you go straight into the risk entry trade. There's pros and cons of each, but I'll go through that in another Zoom call or in another lesson or whatever. But I want to keep this nice and short. Okay, so we break down to the lower time frames. Now, I'm going to look right here at the 1 hour time frame as price approaches my institutional candle. So as you can see, the first thing I can see that obviously got break of structure right here. Okay, we broke structure right here. We retested the structure and we kept continue on, creating higher highs, higher lows, higher highs, higher lows, etc. Now, as we approach our point of interest, which is the yellow box, see the way price is slowing down. Okay, so price is slowing down, and this is our first tap. Okay, this is our first tap on the institutional candle on the daily time frame. Now here is why I wouldn't have gotten in on this institutional candle. So obviously what we usually say is we're looking to get in on a re-entry, okay, on the lower time frame. Basically, we're trying to look at a lower time frame institutional candlestick to get in on. Now here's the issue with why I wouldn't have taken this one. Break of structure. I need my most recent higher low that's formed to be broken in order for it to be considered a break of structure. So in this scenario, I would want either here or here. It doesn't really matter. Okay, so let's just say here for now to be broken. Okay, the fact that I did not get this broken, and remember, we're taking a look at price from here. Don't look at any of the price action right here. We're specifically considering the price here. So in this scenario, this will be the most recent higher low. Forget everything to the right. This will be the most recent higher low. We made a higher high. We need to break this higher low in order for it to be a break structure to the downside. Then I will look to enter off a retest back up to institutional candle, which we didn't get that. So I wait. Okay. Now, as you can see, price makes another run up, fails to break the high. What is price doing right here? Let's drop to the lower time frame, get a better understanding of this. Okay, so okay, as we approach the lower time frame, what are we starting to see? Now I'm going to use my replay tool, make life easier for myself. Replay tool, and I'll probably drop to 5-minute time frame just to get a better view of this. Now what you can see right here is basically just some sort of distribution schematic occurring. Now as I said, I don't really trade Wyckoff. You don't even need to know the events. Like, just understanding what the events do is perfect. Understanding the function behind what the distribution schematic is doing is all you need. What is it doing? All it's doing is manipulating highs, and we're breaking structure downside. That's the main core of it. That's what you're looking for. That's what you're trying to identify, basically. So as we touch our first point of interest, this was very, very choppy, by the way. Just a battle between buyers and sellers on the 5 minutes, you can see, failed to break structure. But notice the lower lows. Okay, notice the liquidity that we had right here, the equal lows that we had right here. So this is liquidity that's going to be eventually taken in the future. Okay, then we make an yeah, so that's the push up right there. And then we get a rally straight down. Okay, this is my automatic reaction. Okay, and then I get another push up, and I fail to break this high, and I fail to break this high. What am I creating right here? Equal highs. So I'm creating liquidity, I'm consolidating, I'm accumulating liquidity just above these highs. Okay, before I get my last push up. Okay, so your last push up could be considered your UTAD. Okay, your uptrust after distribution. Okay, so price is distributed, boom, you get your uptrust. What is the uptrust doing? The uptrust is pretty much taking the last liquidity. Okay, just making one more run on the highs, vice versa for an accumulation setup. The spring, it's making one more run on the lows before reversing, and then creating more breaks of structure on the higher time frame. Okay, now we get this. Perfect. Do I enter a setup right here? Now remember, we're not entering a setup realistically until we're in like phase C, end of phase C, start of phase D. So I don't really care what happens here. In fact, you don't need to be noticing what is occurring here. Like, you don't need to mark out like a PSY or AR, buyer's climax, blah, blah. You don't need to mark out any of these at all. What is interest of you? What is interesting to you is going to be occurring just around this level once you start seeing a UTAD or UT form. Okay, that's when things start getting interesting for us. Okay, now my light just fell, so let me fix that and I'll be back. So my light just fell there, but back now. So as I was saying, what would be of interest to me would be this level right here. So basically, realistically, I won't need to identify that it's a distribution schematic at all until I start seeing what's of interest to me right here, which would be that UTAD, where I take all the liquidity that's been previously accumulating above these highs right here. Okay, simply you'll notice a distribution just based off of just like a consolidation. Once you start seeing consolidation, and then you're seeing that each time we're touching into a point of interest, key point of interest, you want to see distribution at a point of interest. That's what I would like to trade. That's a higher probability setup for me. Tap into a higher time frame point of interest and drop down to the lower time frame. So yeah, we have that right here. We make the last run on these highs, we drop, we break a structure, key point, break of structure. This is what you're looking for. Once we break this low, now I can look for retests. Okay, I can look for retests on price. Now this would have been like a 15-minute. I'll break a structure. My 5-minute would be somewhere up here. So realistically, all I would need, like if I broke it down to 1 minute, you'd see a bit clearer, but this is my low. So the fact that I got a break right here, I could potentially look for an entry right off the open right here. Unfortunately, that didn't tap you in, and where it did tap in, it was in fact an imbalanced setup instead. So we go from wick to wick. You see that imbalance setup right here. I'm not going to go too deep into imbalance setups. That's already a lesson on the course. In fact, I made a new lesson on the course specifically for imbalances, went even more in depth to show you guys how to use it. So if you are on the course and you haven't actually watched and you've only watched the old lesson, make sure to watch the new lesson, because I'm always updating the older lessons constantly and adding more lessons to the courses. So it's not a thing where it's just a once-off thing and you just watch. No, it's always being updated, always new value being updated. So make sure you're constantly checking out that course page, you know. So that would have been a 50% imbalance entry. Boom. Now, let's say you missed it. Let's say you don't take imbalance entries. No worries. You get that break structure downside. And you can see that off 15-minute time frame. Once you get that break of structure to the downside on the 15-minute time frame, perfect. Now, what we wait for is a retest back up to the area of supply right here, which is my institutional candle. And I get in right on my institutional candle. You see right here. And there we go. So my stop loss would be right above the high. That's a 3.5 pip stop loss. And my targets, my first, realistically, I probably would take profit fully right here. Okay, I think I'd be happy here. Second TP. Okay, sorry, first TP, we're probably below the slow. So whenever I take a new low, I like to shave some partials off. I've sent in my trading plan to you guys in the Discord. So that's just personally my trading plan. You guys can choose whatever you like just based off experience. But these are kind of the rules that I made for myself based off what I've seen happening to my trades before, you know. So it's all about experience and just trial and error really. So TP1, probably take another, shave off another amount at the lower here, and then my last TP will be right here. I take out the remaining 25%. Okay, so that was a beautiful trade that you could have capitalized on right there, giving you nearly a 20-to-1 risk to reward. Let's say you missed a 15-minute setup, you can still enter same institutional candle. Okay, that lines up with the 1 hour, which makes it very powerful, because this one right here lines up with the 1 hour. Now the risk to reward is literally half. Okay, but overall, still a decent trade. That was a snipe, so you were not in drawdown one bit. Okay, and you still broke structure below this low. Okay, now I don't know, did you? That one's debatable there. Realistically, if you don't get a candle close below, that would be liquidity purge. Okay, so maybe, probably, if I was at this at the time, probably wouldn't take it from the 1 hour, because it wasn't a 1 hour break structure, but 15-minute break structure, yes it was, because candle close below the low. Okay, so probably would have taken it here either way, because it was a nicer risk to reward anyways. 3.5 pip stop loss. You can stack up on those lot sizes. Okay, they can really go up in size. So overall, that was a beautiful trade that you could have capitalized on right there. And as you can see, if you let this one run, this one was running. Okay, now I like to give you realistic TPs. I don't like to just say go hindsight and then just give you unrealistic TPs. This is a realistic TP that I would have set for myself. Okay, yes, the trade might have ran for 60-to-1 RR. Okay, yes, it might have ran, but this is not realistic, because a lot of people won't realistically hold to here. And the thing is, you're probably taking partials along the way, so you're not really getting the 60R trade here, if you understand what I mean, because you're shaving off constantly from your trade. Unless you held here, you're not actually going to be getting a true 60-to-1 risk to reward, meaning that you won't actually get 60% on your account if you were shaving off partials constantly throughout the way. Okay, so that is pretty much it, guys. In fact, I don't even see the need to go down to another setup, because that is as simple as that. Of course, I go into more detail in the course, in the 5 Zoom sessions that we do a week, but as I said, that's not compulsory. I'm still dropping a lot of value on YouTube, guys. Hopefully you guys are enjoying it, gaining value from it. Please don't forget to drop a like on the video if you enjoyed it, drop a sub, and as well as that, make sure to check out the Discord server down below. Click into the description down below and click that Discord server, join, message with all the other smart money traders in the free chat. And yeah, that is it, guys. Thank you guys for watching. I'll catch you guys on the next one. Have a good day.